Eric Mother with Mother.com. It is December 10th, 2015. Let's take a look at the markets here. We've been trading for about an hour and a half, close to 2 hours. And we are looking at the markets called up about 0.66 on the Dow, 0.47 on the NASDAQ, and 0.51 on the SPX. A little bit of a volatile session, but let's take a look at the charts and see what we have. I do have some short ideas and some bullish ideas for you guys to consider. We begin by taking a look at the Dow, and the Dow, just go back to what we've been watching. The reason is, as we get closer and closer to this line here, which has been resistance going back to beginning of 2014, just like that. And so the key is whether we are going to move below 50 or whether we are going to hold above 50 for this week, so we can determine any potential magnitude to the downside. So the risk is, where is the market trading on the weekly charts in relation to the 50 RSI level? So right now we are above 50 on the Dow, and so the market might not have as big of a drop as it was looking like earlier in the session, or at least as of yesterday. Also, one quick note here, we are coming back to test the 10-week moving average. Right now they seem to be holding, right? And also there's a trend line on the hourly that we can just draw something like that. And the market has come back and pegged that level there and seem to be holding, which is good. Let's take a look at the daily for the Dow. And the daily for the Dow probably has the best looking chart in terms of best argument for a market moving higher. Number one, we are holding nicely and steady above the upward sloping 50-day moving average, So the 50-day moving average having recovered, market is coming back, showing support there, which is a good sign of a market that is stabilizing, or at least sideways before probably probing lower or higher prices. So just the market's been trading in this range for the most part, and I think, to me, my strongest reason why the market, if I was forced to pick a reason why the market might go higher, is this line. And I've spoken about this before, because once we broke out above this line, the blue line, the market has been trading higher and trading okay, right? So since then the market has just gone on to record nice short-term move higher, and since then the line has been also used by the market as support. It was support here during this low, and now we're seemingly forming a double bottom over the last week or so, which is this lows here. So if this line holds and the market slowly starts working its way higher, then that might suggest we might see an attempt to break out above the recent all-time highs on the daily closing for the Dow. So really the key, in my opinion, is this chart. If I was to summarize this video today, is this is a line where the market can hold, and if it holds on the daily, then that suggests expect higher price levels in the short term. Also, it is also a line we can watch, because if we break below that, a break below that would suggest that now we have also broken the support around the 50-day moving average, and that would suggest that now lower prices are very likely, and also that would also be breaking a trend line that we can draw somewhere around there. So above the blue lines is bullish for the market, right? But if we break below either of these blue lines, the market trends low. So right now the market wants to hold. Also, take note of where the Dow is trading in relation to its daily RSI. Should it move above 50 for today, or whenever it moves above 50, expect a big up day. So getting very close to the threshold of 50, anything above 50 suggests to me we might have a strong close whenever that happens, maybe today. We shall see. Take a look at the S&P 500. And what we have here is a similar type action to the Dow in terms of resistance on the RSI on the weekly, and also price channel resistance potentially. And so the key for now is the market is trading close to 50 on the weekly RSI. For us to know which way the market wants to go in terms of magnitude, is just watch that level. Anything above 50, the market is okay, and maybe we've seen the worst of this week. But should the market slip back below 50 on the weekly RSI, then that's going to suggest a net big down week. For the day, S&P 500 we can see here that there's a trend line. It looks something like that. You can draw it this way or maybe even that way, but all they are pointing to is the same thing, which is support on the trend line there. So if it can hold like the Dow, then maybe it has a chance of moving higher, and that's where the fight is. So above the blue line, and we see the market will eventually push above that. Also S&P 500 might have a chance of moving above 50, so watch that for a nice up day whenever it moves above 50. Otherwise, should we break below those two blue lines, then we might be looking at a market that wants to pull back. S&P 500 hourly, and this is just a simple line connecting recent RSI lows and also connecting, you can see off the lows here in late September. This was the entry in the market on hindsight. This is hindsight analysis that should give us future reference points, and so you draw a line from there, and every time you move above below the green line and back above it with uniform action like we did there, it tends to be a buy for a re-entry somewhere there. Support on the green line, uniform action support, which is this level, and now we have actually found support again on the blue line, so on the green line. So here's what's taking place. So those are the things that are, and also don't forget slight lower low and also an improvement in the RSI. So keep all that together, hour to hour, maybe the market wants to move higher. So a little bit of a confusing market here, obviously, given the volatility. Now I want to show you two charts that might give us a bullish argument. So these two charts to me indicate that the market might be setting up to move for swing trade higher. I know that's a surprise, but from my previous analysis, but it's just a simple line on the VIX, and this line has been very reliable. Oh, let me draw that. Okay, so there you have it. You can see all these highs on the VIX, which meant the market was a buy, pretty much have come on this red line, all of them. Every time we move back below the red line, the market drops. We moved below it here, the market did rally. We did see resistance there, the market was a buy. Resistance here, the market was a buy, and now this is showing resistance, suggesting the market is a buy. So the more this is confirmed as resistance, the more we should expect the market to be moving higher from current levels for a swing trade higher. Take a look at the VIX hourly, and here again we see evidence of resistance. Let me draw that a little bit different. So somewhere around there, and that level is just slightly below 69.1 or 61.8, just slightly below 61.8. And again, we can check this out. Say every time we move below that line, we get a pullback in the VIX, and the market tends to move higher, albeit for a short-term move higher. And also right now we are showing that resistance. So anything below the red line is confirming that the market actually wants to move higher. Lots of confusing things, but that's what that says. Now let's take a look at one more chart in terms of, which is a little bit of a different picture. And first and foremost, take a look at the VIX trading at just about 19 there. So the VIX at 19 tends to suggest that short-term charts are more reliable. I hope that, let me repeat that. So because the VIX is elevated, an elevated VIX means the market is very volatile, which means that we can rely more on the short-term charts like the 30-minute, the hourly, and minute charts because the VIX is elevated. So because of that, let's take a look at the SPX. I want to take a look at XPX, but this time from a 5-minute chart, something I don't use all the time just because I like to use it only when the VIX is elevated. And this chart here shows that the market on a 5-minute chart, the market is poised to pull back. So lots of confusing forces. You can see every time the market has moved below this red line, we've had the S&P 500 pull back for a swing trade low every time. And we've done this already over the last, let's call it half hour or so. The market has hit that line and is showing resistance. So given this chart, 5-minute to 5-minute short-term basis, the market still has a lot to prove itself. For this market to be moving higher on your 5-minute charts, just insist that the S&P 500 can trade above that red line. So lots of confusion. Now there's another chart that might give us some color in this confusing environment, and it is for the Dow Transports. The Dow Transports right now, let's take a look at the 34-month, so 3 years of data. And the key here is, as long as the Dow Transports are struggling to hold above the previous monthly closing low of 7785.63, as long as the markets are trading below that previous 2015 monthly closing low, then that suggests to me that there's no reason to think the market can move higher. So let me repeat that. As long as the Dow Transports are breaking down, the risk in the market continues. At the end of the day, the risk continues to be to the downside. But if the market can recapture back above that level and show support, again 7785.63, if the Dow Transports are above that level, then the market is probably recovering and is on its way to some short-term swing trade higher. The reason why I say that is, of course, if the Dow Transports are breaking down, the RSI is moving to fresh lows, fresh 3-year lows. RSI is moving below 50. Because the RSI is moving below 50 this month, it suggests a net big down month for the Dow Transports. We've talked about the fact that the MACD already broke down early this year, and the main MACD just now is looking to break down also. So the Dow Transports are giving us a big picture idea that the market might struggle below 7785. In other words, put another way, there's no need to buy the market or to be long. There's really no need to be long the market as long as the Dow Transports are below 7,785. Anything above that threshold, then you can probably consider some long opportunities. Okay, because condition is, of course, confusing, I'll have some bullish ideas and bearish ideas. So let's begin with the bullish ideas. We begin with NHTC. NHTC here, and we're going to use the monthly. The monthly chart, it does show that it is right now attempting a breakout attempt above the recent monthly closing high. The level to watch there, and all these price levels are going to be in the description of the video. So take a look at anything above 49.21, and this thing is breaking out. It's been one of the stellar performance over the last 2-3 years, moving from about under $2, somewhere in that range, all the way to the 50s. So nice mover. If it can move above 49.21, that's one that could continue doing well. RSI is above 69.1. MACDs are trading well. So that one looks good. The other one is a BRCD, Broadcom. And we can see here that, oops, not that. That's a short. But anyway, I typed the wrong ticker symbol. BRCD is a short. Just looking at the chart, I had not considered this for this video, but you can see moving to fresh 3-year lows on the MACDs, RSIs, not good. But the stock I want to talk about is Broadcom. See whether I get this one right this time. Alright, so you can see a different looking chart here. You got MACDs and RSI doing well. RSI is above 69.1 on the monthly. MACDs at 3-year highs. Here the stock needs to hold above the previous monthly closing high, and again the price level there is gonna be at 56.53. The stock is already above that level. It's not too extended because it's not more than 5% above 56.53 or somewhere in that range. So it's within the buy point range, I would say. Somewhere around there would be the buy point range. If it can hold above 56.53, it's a good candidate, especially if the market is recovering. Otherwise, if the Dow Transports are struggling, then these long ideas will not work. Let me repeat that. As long as the Dow Transports are struggling, these ideas will not work. BZUN has no data in terms of the technicals on the monthly. So we go to the weekly, the next time frame, and we can use the fact that it is, in my opinion, looks like it is trading at highs on the MACDs. So MACDs at highs on the weekly, and the RSI are about to move to fresh all-time highs. If this stock is moving higher, the level it needs to clear is actually a monthly closing high. So for the monthly, for the breakout, instead of using this recent weekly closing high, I'm going to use the monthly. Again, all these things are arbitrary, so really just pick whatever you want to use as your buy point. I'm going to use the monthly buy point just because. And the level to watch there is if the stock can move above 8.64, and if the Dow transports are recovering, then that's a candidate for a stock that could do well. Take a look at the other idea, SSRI, and here we are looking at this stock. So SSNI is a ticker symbol, and what we are looking at here is a stock that the RSI is trading at all-time highs, MACD is at all-time highs, and so that's why it's on the list. And we're going to use, because the stock has moved, let's go back to the monthly, because the stock has already moved above the monthly buy point on hindsight, which was somewhere under 14, which is one reason why I prefer monthly charts, monthly breakout levels, because they give you an earlier entry point. But the stock has already broken out on the monthly, so we missed that. We go to the weekly, and on the weekly I would contend that it's already broken out on the weekly, and so we have to find another logical point of reference. So it's already broken out on the weekly, actually working on week number 2 of the breakout. And so what we're going to do, or what I'm deciding to do, is use this intraday high here at about 15, because it's been resistance over a period of weeks and months. So we are going to use for this one the intraday highs of about $15. So if it moves back below 15, that would trigger a sell. But the stock looks good as long as it is holding above 15. Take a look at one more, and so let's take a look at EGRX. All right, we go to the monthly. Number one, it's a nice performing stock over the last year or so. Nice performer from, let's call it mid-teens to the highs above 100. So the nice moving stock. Over the last couple of months, it's been sideways here. We can call it volatile sideways. And so if you're looking for a momentum play, we can use this recent monthly closing high. And the monthly closing high level there to watch is if the stock can sustain above 96.58. So if you want to play the momentum here, it has to be above 96.58 and see what happens. And the MACDs are okay, you know, at highs here, but about to cross over above 0. So that's the 0 line. And the RSI is trading above 69.1. Money. Right, so it needs to be above that breakout level if it is gonna work. All right, let's take a look at some bearish ideas. We begin by taking a look at GameStop, and I'm just gonna show this and just go through them. We are trading at 3-year lows on the RSI and also on the MACDs, so that's why it's on the list here. It's breaking down on the MACDs also, and the main MACD is not too far off. So I think GameStop is a short if it can stay below this 2014 monthly closing low or 52-week monthly closing low. The level to watch there is at 32.59, which is, it's trading below 32.59, so this one is a short. And see lower prices in the coming weeks and months as long as that's the case. The other stock that can also be a candidate here for is BBY, Best Buy. Best Buy also falls on the list because number one, we are breaking to fresh 2015 monthly levels. The level to watch here on the monthly is if the stock can continue trading below 31.58. That's bearish. And also let's take a look here. And all right, if I take a look at the MACD and the RSI is not yet at 3-year lows. So this one might not be the best candidate, but it's not yet at 3-year lows. But if the market is sliding, it might also follow through. And also we can see that the MACDs are not at 3-year lows, but close enough. At least you need one of the MACDs to be at 3-year lows. I would still contend that it's breaking down just because of this price move below the recent 2015 monthly closing low. But between the three short ideas, it's not the most timely. GameStop there is more timely. Let's take a look at the last idea, and just want to take a look at the technicals on this one. I want to take a look at, this is 36 months. I want to take a look at 34 months, which is close enough. All right, so we see here, this one is, yes, definitely giving us a sell signal because it's already trading at 3-year lows on the MACD. MACDs are below zero here, below zero. And so it's already met the minimum requirement on this one. And the RSI is also just now looking like it wants to move to 3-year lows. So this one is also meeting the minimum requirement. So it should give you an option of something to own on the downside, as long as it is breaking below the recent monthly closing low. And the level to watch there is 95.69. Anything below that and the stock is in trouble. So there you have it. Those are the ideas. We shall see how things go. And here we are looking at your markets with about 4 hours 20 minutes to go before the close, market off the highs. Very confusing, but use that Dow Transports chart to determine whether you should be long or short. And so let me end the chart there with the Dow Transports one more time, if you don't mind. So on the Dow Transports, below 7785, this is not a good market to be long. So 7, anything below that, you have an excuse to be short. Anything above that, you have a reason to be long. Eric Mwadith.com. As always, good luck, peace, and blessings. EACS. And so it is. Woo! Yeah.